So today I'm going to be teaching my friend Josh my trading strategy for technical analysis in the stock market. Now, if you're just tuning in, this is actually part 4 in this series where I'm teaching you how to become a consistently profitable trader. Now, if you're just tuning in and you want to start on part 1, we will put the link in the description below to the full playlist of the series. Now, before we get started, I want to briefly mention that if you are out there and you are looking for a mentor to help guide you into that consistent profitability within the stock market, then I do offer a mentorship group. Now, not only will you receive access to an entire curriculum covering my whole trading system, essentially everything that Josh is going to learn in the coming months, you'll also have access to see my exact trades. So it's like the equivalent of sitting over my shoulder throughout the day. So whenever I'm putting on a position, I'm posting that entry, and whenever I'm closing that position, I'm posting that exit. If you want to learn more, the first link will be in the description below where you can go ahead and apply. With that said, let's hop on inside my computer and get started. So how did your homework go?
The homework went good. You can put in a clip of this. This is like my first time using OBS.
Okay, so I just filmed for 30 minutes, me doing the homework that Mark told me to do, but I didn't know how to use OBS and it was just recording like the top little corner. So we're gonna redo this, so time lapse, go.
And then I had to reshoot it all, but it's okay, it went good.
Okay, what you did was you went through, what, 100 charts in the NASDAQ?
Yeah, I went through the NASDAQ, and then I actually went through with my girlfriend on hers as well, so.
Awesome.
And I went through back and forth.
All right, so today we're gonna really be diving into the way I go about trading. Patterns, trends, setups. We're gonna talk about all of the TA is technical analysis, that I do to actually decide what direction to bet on a stock going. Make sense?
That makes sense.
So this is gonna be loose and we'll kind of just, we'll hop right into it. So for starters, I like describing myself as a trend or a pattern trader, right? So essentially what I'm trying to do is I'm trying to first identify a trend. Now I do all of my work on the 4-hour time frame, okay? So first identifying a trend, second within that trend, trying to identify any patterns, and we'll go over examples of all of this. And then I use 3 moving averages, the 180-day SMA, the 50-day SMA, and the 15-day EMA. Okay, and by doing all of that, I'm able to find what I like to call setups within charts. So I trade 4 setups. So those setups are kind of an accumulation of both identifying the trend, the patterns within that trend, using these moving averages as reference points, if you will, and taking all of this into account and looking at a chart and saying, hey, I've seen this chart, exactly what this chart looks like. I've seen, say, 20, 30, 50 other times, right? Because we can see based off of the way a chart is reacting to the moving averages, based off of the pattern, the historical data that we've seen on this chart and how this chart has played out, right, over the last, in my case, 180 days, because I'm on the 4-hour looking over the last 180 days. So in the last episode, we mentioned, those restraints that we're kind of working in being the all-time high on the chart and the all-time low. A couple on my setups, what I'm doing is I'm trading around that all-time high or all-time low.
Okay.
Does that make sense?
Yeah, seems pretty straightforward.
Okay.
So it's stuff that you can go back on and like you said, you've seen it a bunch of times and
yes,
you know what you're looking for.
Yeah, so the idea is that I'm not looking for like candlestick patterns. I've said this before, right? Like bull flying bear flags. I like making jokes about the like preconceived, I call them candlestick patterns. Within this trend, I see patterns that have played out many times on this chart. And then we're gonna get into talking about moving averages and seeing whether they're respected or not. So we're gonna be using all this information to essentially be like, this is a setup, one of these 4 setups that, I'm going to be looking for when going through charts. And then we can kind of check off the boxes, if you will, as far as the criteria that we need to validate an entry behind that setup on that chart. So if we're going to take a trade or not. The setups I have both work in bear and bull markets, which means that no matter if the market's going up, if it's going down, I can always capitalize on any market condition and make money. Later on, we're going to get into those setups specifically and cover 4 of my setups. But today I really want to go over essentially the basic rules for finding these setups. Okay, so we're going to share my screen and we're going to hop right into it. And just feel free to interrupt me. I'm going to give you some examples, kind of cover the criteria that I'm going to look for and the rules that you need to follow to find setups.
Okay, sounds good.
All right, so at this point you have like a solid foundation, I feel like, as far as being able to identify both support and resistance levels within using, I guess, candlesticks and using moving averages.
Correct.
right? Do you feel pretty good about that?
Yeah. I do.
And it took you like what, an hour?
Yeah, it didn't take very long, probably an hour.
That is kind of the step one, right? Obviously, we covered that in the last video, being able to identify support and resistance areas on a chart. So that's good. So today, let's talk about, I guess, first things first, moving averages and whether a moving average is actually going to come into consideration, I guess, when looking at a chart or not. And I like using this word respected. Using this example on ILM, now this is actually a trade that I'm currently in. I think I'm up. Let's see, I'm up 2.2K on this trade. I'm down 1,000 on the day, but I'm in this trade right now, up whatever, a couple thousand. And let me ask you first, what's the trend?
Down.
Down. Okay, it's bearish.
Bearish.
So it's a bearish
yeah.
trend.
Bearish trend.
All right, and now when we're looking at these moving averages, do you remember what this one is? The green
180
180
SMA.
SMA, 180
50-day.
day SMA.
And
Nice.
then 15-day EMA is the blue.
Yeah, so 180 day SMA, 50 day SMA, 15 day EMA.
So 180 days the strongest, 50 second, 15 least.
Strongest in what sense?
Strongest as in like if it's below it, resisting if it comes up and hitting it, you mean? Like that, like resisting it, and then if it was above it, supporting it.
Okay,
Down,
so
down, off.
if price is trading below either moving average, right, whatever moving average it may be, that moving average is going to act as a resistance. On the other hand, if the price is trading above, it's going to act as a support.
Correct.
Okay, good. Well, how do we know if a moving average is actually going to act as a support or resistance? How do we know if that moving average is going to be valid when it comes to using that to determine whether there is a trade to be taken or not? Do you have an idea what I mean?
Based like on the past, like if it's
Yeah.
supported or resisted in the past.
Yeah. So
And how
if-
many times it's done it.
yeah.
Okay.
So respected or not. If you see a chart
Respected, that's the word.
that's a like kind of good word to summarize it. So for example, ILMN, this is a chart where moving averages are clearly respected. Now, really, we're just looking for the 180 day and the 50 day to be respected. Those are the two moving averages that are going to correlate to actually looking at a chart and being like, all right, that is part of the criteria that I'm looking at, making sure that the 50 day and 180 day are respected to then validate an entry, like whether there's a setup there or not. Whereas the 15 day, that is going to be used as what I like to call a trade management moving average. So that will really only ever be or come into account when it comes time to say, this is where my support is, my resistance is, whether I'm long or short, this is where I'm setting my stop loss and take profit. So that moving average is not going to be, a deciding factor in whether we should take the trade or not from a setup perspective, but it may be when it comes to determining where you're going to be right or wrong. Again,
Okay.
based off that trade itself. Does that literally just seriously interrupt me if this is not making any sense?
No, it seems to be pretty straightforward.
What does it look like on this chart? Would you say that candles are just trading straight through the 50 day or the 180 day and not respecting these moving averages? Or is the 180 day and 50 day respected on this chart?
The 180 day definitely looks like it's respected. And then, so does this matter if it breaks through like a little bit?
Okay, we'll get to that because I want to save that for later, but I can talk about that right now. So what the market likes to do is it likes to probe areas of support or resistance, right? Key levels on a chart, and it likes to shake out traders. So think about however many people may be looking at this chart right now. They might be looking at the same moving averages on the same time frame. Now, everyone is going to go about setting their stop loss, say they're short, and the chart starts to push. They're going to go about setting their stop loss right on the 50 day. The second that chart breaks the 50 day, they're out. So kind of putting yourself in the position of remembering that we're all potentially looking at the same chart. There may be thousands of other people with the same trade idea as you. Where are most people going to be getting out or getting in? And so the market probes these areas, it shakes people out, and then it remounts. And this happens time and time again. You'll very rarely see the market or whatever stock you're looking at perfectly touch, an area of, in this case, resistance. Say the 50 day is acting as resistance. In this case, it is. Well, the market rarely hits that level and then, bounces off of it exactly at that point. It normally probes that area. People get shaken out the second we break above the 50 day, and then you can see that hard retracement, that hard pullback.
Yeah.
So later on, when we get into actually creating our trade plans, that's something we want to remember, is that the market likes to probe areas of support and resistance. Think about where most buyers and sellers will be on a chart, and don't set your stop loss or your take profit, your SL or TP,
Right
area,
at the-
right at that area.
Okay.
You want to give yourself a little room, a little wiggle room, if you will.
So it has the chance to probe and then
Yeah.
either drop back down or bounce back up, depending if
Yeah.
it's above or below.
Exactly.
Okay.
And I'm glad you got to ask that. All right. So on this chart, we can see the 50-day, knowing that the market likes to probe areas, right? Probe levels of either support or resistance and remount or reject, however you want to put it. 50-day definitely looks like it's been respected. So we could see before when, price was just trading straight through the 50-day, it was not respected. We lost the 50-day, ended up breaking slightly above, retraced below, broke slightly above for a little bit. The market was really trying to decide whether it was going to respect this level or not. And then boom, it looks like beginning of August, we really saw that pull below. Obviously rejection off the 180-day. That was a result of earnings, that volatility right there. And then, since August, we've been trading below the 50-day, okay? 1 test, 2 tests, 3 tests, and it looks like we're just going in for a 4th test, okay? So the more times support or resistance area has been tested, what is that going to tell us?
Stronger it is.
Stronger, right?
Yeah.
It's been 4 months,
Yeah.
just about, of the 50-day being respected.
Very good.
And the 180-day, yes, it is, I would say respected since about May. Okay, you can see, coming off that high at 238.55, ended up retracing, pulling back below, test, rejection, test, rejection, test, rejection, test, rejection, test. So we've, really, really been in a downtrend. The overall trend is very strong here. Direction's very clear, right? 180-day is respected, 50-day is respected. Great. We checked that off our box. Now that is going to correlate to one of the setups we'll cover later on. In this case, the 180-day is sitting very far above where we're currently trading. Okay, we're sitting about 21% roughly above where we're currently sitting. So that won't really ever come into consideration if you're going to take a trade on ILMN. That's kind of a mouthful.
Yeah.
Try saying ILMN.
Was it?
ILMN.
ILMN.
If you were trading ILMN right now too, you wouldn't really ever use that level. That area at the 180-day, yeah, it is respected. Yes, we know that will be acting as a very strong resistance level, as it has quite almost been a year. 8 months we've been trading below that 180-day, but it won't come into consideration in a trade plan. So does that make sense?
Yeah.
Okay, cool.
It's pretty
No
straightforward.
questions?
You answered all my questions I had.
Awesome. All right. One of the biggest things too that you want to look for when you're looking through charts is a clean and clear chart, right? The cleaner and the clearer the chart, it's just going to be easier. More than likely, those moving averages will be respected. It'll be easier to identify that setup, the patterns, set your trade plan, where you're going to be wrong, where you're going to be right. So this is a very clean and clear chart on ILMN, but we can look at, let's just pop over real quick to the NASDAQ 100. I think very quickly here, we'll find a chart that I would say is not clean or clear. That's very choppy. So CDNS, a CSGP, where you can see none of the moving averages are
spikes
respected.
and stuff, and
A lot of volatility, 0 moving averages being respected. So let's just go through a couple charts, and I want you to tell me literally, are moving averages respected or not?
Okay.
Okay. All right, go for it. Respected or not?
No.
No. Good.
No.
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 No. Again, no.
So you can see a lot of charts are not respecting moving averages. What would I do? Just knowing what I'm teaching you, would I trade one of these charts where moving averages are not respected?
No.
Like this choppy.
No, you can't predict it. There's too much going on.
Not necessarily predict, but I guess one of the boxes that we're looking to check off when it comes to most of the setups that I trade are, the question is, are moving averages respected or not? Can we check that box off or not? Is the 180-day respected, yes or no? Is a 50-day respected, yes or no? Again, it's kind of based around the setup specifically, but in general, more than likely, I'm not going to be touching a chart that looks anything like this. Tell me.
No. No.
Now, some, this chart is a little choppy, a little volatile. You can see we got the high at 219.50, low at 184.69. There's a weird looking chart.
180 came out of nowhere.
180 came out of nowhere. I wouldn't touch something like this.
No.
Maybe go back.
Maybe?
Maybe the 180 day, we did drop below. I definitely will be acting as an area of resistance, I think, but we haven't really seen any clear tests of it.
How far
So it's hard
back
to
do you
say if it's
look?
respected.
Like 4 months?
Yeah, that's a good
Ish.
question. Well, think about it like this. So if your average hold period on a trade is, say, 3 to 5 days. So essentially when you put on that trade, you're either going to hit your stop loss. I'm just going to say SL or TP moving forward because that's easier. You're either going to hit that SL or TP within 3 to 5 days. So you're either going to get stopped out or end up taking profit on that trade. When you look at a chart and you kind of see the ranges, so you can really draw out the percentage from where you're currently trading to an area of resistance or support, kind of taking into consideration how volatile a stock is. What is the average daily movement of a stock? So you can kind of see some stocks on average will move about 0.5% a day. Some will move about 5% a day. More than likely, swing trading in the way you're going to go about learning how I trade, kind of what we're doing right now, I'm really never going to set a trade plan where my SL or my TP is so far away from where we're currently trading that I would need to even take into consideration an area of support or resistance formed 4 months ago. It's more of the historical data and seeing that price has played out time and time again. Obviously, the more tests of a support or resistance level are further going to validate and confirm that area actually holding. So if we can see a chart has been holding below the 180 day for many months, or the 50 day for many months, and especially we can see we've had tests of that area with rejections, that's really just going to validate if we do set a trade plan up based off of one of those moving averages, or we take a setup. Because think about it, if you were at 41.98, say it's trading at 41.98, well, is it really going to matter? Is the area of support going to matter up there? No, because, you could draw it out from where we're currently trading to up there. Essentially, you're not playing moves over periods of months where, if this was going to be a position you put on and it's headed to hold for the next 2 to 3 months and you wanted to play a move all the way back up to that all-time high, then sure, you want to keep it, pay attention to what was happening 4 months ago. But generally, when I say looking at the more immediate trend, in the more immediate trend, which is the last month to 2 months, that is where I'm looking to see moving averages really be respected or not. And then obviously the further we can see that they've been respected back over the last 180 days, that is just going to further validate that trade is going to be a really solid trade. Make sense?
Yeah.
Respected or not respected, does that make sense where you can look at a chart and, within probably 5 to 10 seconds, identify whether averages are respected or not, right?
Yeah. So this isn't really probing, right?
No, because here's the other thing. If
That
you want to
broke
zoom
through
in,
and it's been
it very clearly broke through, and you could kind of just see it was about a week and a half to 2 weeks that we were actually trading below the 180-day SMA. Also, we saw earnings on Monday. Looks like pre-market. That's what that blue little light
what's
bulb
earnings?
is. So a stock, there's 4 times of the year, Q1, Q2, Q3, Q4, where a stock will essentially have what is called their earnings call. The company will come out with their data, how well they performed, how much the company made or lost within that quarter, and that will cause and create a lot of volatility within the stock itself. So I'm never gonna ever trade a stock through earnings, okay? There's reasons why to not do that we could talk about later on, but the biggest thing is that there's just going to be a lot of volatility. The stock could, shoot up 10, 15%, whether earnings are in the morning or at night, or, pull back, all of a sudden that stock just gets slammed 20%. I've seen that a lot of times. So your positions are just going to be on this roller coaster where you don't want to ever trade earnings.
It's all skewed up.
It's playing earnings or trading earnings is a coin toss in my opinion, and it's just not the right move.
Okay.
Just don't do it. But you can see when we're looking at a chart, if you see those blue light bulbs, well, that's where earnings was, and you could see a trend that had been a very strong trend, or you see this pattern that had been forming over a long time, or moving averages were respected over a long time. That can just be broken in a second after earnings.
Yeah, look, it dropped so much.
Yeah, so we had been holding above the 180-day SMA that had been a pretty strong area throughout the whole year, and then all of a sudden, boom, earnings. But we ended up remounting because it was a very strong area, like we said. If you had your stop set, slightly below the 180-day, you would have gotten way shaken out. And so that's one of the things. We're going to spend a lot of time really going over where is the right or the best area to set your stop loss or take profit, taking into consideration the fact that the market likes to probe areas, shake people out, and then, remount. There's no right answer as to that. There's no percentage off of a moving average or off of a key support or resistance level, like say 0.25% below a moving average is where we're going to set our stop. It's all going to come down to that trade specifically.
Okay.
And really running through the risk reward behind that.
That makes sense. Now this one you would use the 180 day, not the 50 day because it's unrespected, but. And then are you looking for both to be respected, or if the 180 day, like, so the 180 day is respected since August, July.
Okay.
Correct?
Yep.
So then all these,
So those are all tests,
it's bouncing.
Probed above the 180 day, just slightly remounted.
And so it's like, what, 3%?
So we're sitting
4%.
about 4% off the 180 day. Yep. So are you saying if you wanted to go short, you'd use that as your stop loss, or you would go long and use that as your take profit?
My question was more of the 180 day.
Yeah.
Is that enough, or are you looking for both the 180 day and 50 day?
Depends on the setup.
Okay.
So that'll make more sense in the coming video.
Okay.
Yeah. Because there's no, like, looking at this, I wouldn't say there's a setup here.
Okay.
It's too choppy too.
So
So yeah,
yeah,
the
because these spikes are.
So the 180 day is respected, but the chart is too volatile. It's too choppy. Like, even though it is earnings, it's still too choppy. It looks way too choppy, and it would be hard to find anything there, really. So far, we've covered obviously the understanding of support and resistance, which is just going to be essential in trading as a whole when it comes to many variables of our system. We've covered how I look at these trends, how I like to identify these patterns. We haven't talked too much about patterns. So maybe that's something we could dive into a little more, but we've talked about whether moving averages are respected or not, and the whole premise of essentially being able to look at a chart, be able to identify whether there is a pattern or not, and be able to identify whether there is a setup or not based off of the trend, the pattern, and the moving averages. Does that all make sense?
Yeah.
So do you know what I mean by pattern?
Yeah, like the higher highs, lower highs.
So if we want to go back to ILMN, we'll use that as an example. So the pattern here, what is the pattern?
Bearish. Going down.
Or the trend
or
is bearish.
lower lows.
The pattern of, pattern we could see, that's a very straightforward way of saying it, is lower lows. The pattern is also tests with rejections off of the 50-day. We can see the clear lower lows. Every time we've pushed into a new high, we formed a new low. Pushed into a new high, formed a new low. Pushed into a new high, formed a new low. Pushed into a new high, formed a new low. So what do you think my intention with this trade is? Kind of knowing everything that we just covered.
To short it, or
To short, yeah, to bet
is that
on
the
the
right
stock.
terminology?
Yeah, you could say to short. We're just betting on the stock to essentially continue following the same trend. So I'm essentially looking for a pullback down to that low, $89. Okay. This is a very clear pattern that has been, played out now multiple times of these clear lower lows. Every time we made a new high, we've been rejected at the 50-day SMA all the way down into that new low. So I'm looking for a continuation of this trend and of this pattern, knowing that moving averages are respected. And then you can see we've got some areas of support here.
All right.
Does that make
makes
sense?
sense.
Okay. And this is all going to take, practice. We're going to do a lot of repetition. And don't worry, I'm going to cover all of this multiple times, many times over and over and over. I just want to make sure you're actually following along.
You've answered all my questions.
Okay.
So far.
Awesome. Before we wrap up this video, we have some homework. I have homework for Josh, and I think you guys should
follow along with me.
follow along. So the homework is going to be to go through the S&P 500. You don't need to go through all 500 stocks, a couple hundred stocks, and do exactly what we did today, was scan through, right, visually looking at each chart, and just answer the question of, are moving averages respected or not? Okay, so we're looking at the 180-day SMA and we're looking at the 50-day SMA, and you want to just go through respected, yes, no, respected, yes, no. And just train yourself to visually be able to pick up on that. And over time, you'll get better and better and faster and faster. But that is going to be a vital piece of actually understanding setups, which we're going to dive into next week.
Perfect.
All right. Hope you guys did enjoy this one. Again, if you are interested in joining my mentorship group, the first link will be in the description below. You can go ahead, click that link, head over to my website and apply. And with that said, we will see you guys in the next episode. Later.
Peace.